Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. It's a soggy 11 a.m. on the East Coast. I'm Guy Adami. That's Dan Nathan. Apparently, it will stop raining at some point. It never stops raining for the market, Dan. How are you?
Yeah, it's raining. What is it raining? It's raining men. I don't know if it's raining men. It is Pride Week, though, so we got that going for us. I'm just saying.
It's raining. It's raining just,
yeah.
Optimism is what it's raining.
Yes. There's a lot of optimism, even on a day like yesterday and today, the back and forth. I mean, I think while we were doing this, or maybe while we were doing the Risk Reversal pod, the markets kind of took this headline that the Iranians had reached out. They want to go back to the table. I spent a lot of time, by the way, who the hell does this? It's 4:23. And my phone starts going off. We have this app on our phone that, if you go to the floor of our building, you know what I mean? In New York City, when I have a doorman, you press our button, this thing goes off on our phone, and that's how you can talk to people. You can let them in the building. 4:23 a.m. This thing goes off, and I'm like, who the hell is this? And the guy's like, Amazon. And I'm like,
it can't be. At 4:23 a.m.
But so then I find myself, you can't go back to sleep. I am just pissed. I read for an hour about what's going on with Trump and Iran and Israel and what all their motivations are. And, one thing I'll just say, and so I'm a bit salty right now, okay? I did not sleep particularly well, is that there's a lot of stuff going on here behind the scenes. Trump at first said we weren't involved, then we had knowledge of this, then we're not going to provide this, then we want to go back to the table, then they want to go back to the table, and we don't want to go back to the table. They should have taken the deal that I mean, it's insane, right? Like the back and forth or whatever. And so we're all just left here to just try to figure it out. I mean, again, loss of life, all this sort of stuff, you and I, everyone who looks at the markets, we're super sensitive to all that, but we're here to do this, you know what I mean? But they don't make it any easier. And when you think about what, when you're planning this sort of, military response or military, like I don't know, intelligence apparatus. I was reading all about these things. They could send commandos in there to kill Frodo or whatever the thing it is on this mountain, and there's one ring to rule them all. And, why would we want to be talking about any of it? Why would we want to be tweeting about any of it? It just makes for a sideshow. Is that fair?
I think it's fair. I mean, it's a little fair.
I'm just saying but it's not yesterday. Okay. Crude oil was up $5 on Friday. It was down $5 yesterday. Now it's up a few bucks today. The airlines are going back and forth. You know what I mean? Like the stocks and everything. It just doesn't need to happen this way.
Well, I mean, for our world, obviously, there's some consternation around it. I think, listen, I mean, that's just a stylistic thing that, we can argue whether or not they're doing it the right way or the wrong way. I think the reality of the situation is I'd be hard-pressed to believe that there are going to be American troops on the ground. I'm hard-pressed also to believe that the United States is going to get involved in terms of the B-52 bombers and these bunker blasters or whatever they call them. I think that's... But, this first slide that we're going to show you, I don't really know what this means, sort of to your point. Trump is looking for something bigger than a ceasefire. I don't know really what that entails. And, quite frankly, that's why this becomes so hard for us to sort of dissect what's going on in the market and the ramifications it has. I mean, you're bringing up crude oil, but there are other things as well. I mean, the weakness in the dollar, the potential strength in the dollar, and the flight to quality. Yeah. So all these things obviously impact what we're trying to do on a day-to-day basis. Now, I don't think that's his concern. Quite frankly, it probably shouldn't be his concern, but, we're tasked to do it every day.
Yeah, and I don't think that's the administration's concern whatsoever. I just think that we know from the playbook of the first administration, hey, the guy doesn't like wars. Let's be clear. And that's not a bad thing whatsoever, right? So I think part of this kind of back and forth a little bit is they're just trying to get their arms around what their options are and how to deal with, Israel, which has basically done what they wanted to do over the last 2.5 years or so. If you think about what's gone on in Gaza, if you think about what's gone on in Syria, if you think about what's gone on in Lebanon, right? So this is just an extension of that. And by all accounts, they've seemed to be fairly surgical in what they've done over the last few days, not too different than what they did in Syria and Hezbollah. And you can make the argument about Gaza, but that thing is like a never-ending war. Your point about, okay, if we start redirecting, aircraft carriers and, and mobilizing troops, then you know that this is something that, could definitely have a different sort of reaction in the markets. To your point, maybe they buy dollars, maybe they buy treasuries, right? The sort of thing that you normally see in a flight to quality, or what do you call it? Flight to safety, I guess.
Flight to safety, flight to quality. It's the same, pretty much the same thing.
But yet, you know what, though, Guy? In the last 6 months, safety and quality, they've actually meant two very different things. If you go back historically, like, if you think that, the holders of our dollars, the holders of our debt are selling it because they think it's like less than the sort of quality they have in the past, the safety thing is just, okay, you put it in there and your money good, I guess, right?
Yeah, well, let's put up the dollar chart, because I was watching Steve Eisman this morning on Squawk and Friends, and he pretty much voiced the same things he did on Fast Money a couple of weeks ago. He is really not concerned any of the debt problems. I don't think he's particularly concerned with the weakness of the dollar.
Yeah, I think Guy just froze there.
And what he said is, in our world, being early is wrong. He said, but his point is, these people are 40 years potentially early. So what does that make them? But there's clearly something going on right now with the US dollar. And you just said it. Flight to quality means something differently right now. Well, it's clearly not manifesting itself in the US dollar. And I think, again, this is just me, I think it should be concerning for people. Now, we have conversations on Fast Money on this show. A weaker dollar historically has created a bit of a tailwind for multinationals. It's typically good for the market. And I would agree with that. But at a certain point, you sort of cross the Rubicon where it stops being a positive thing and it starts being a negative thing. And I guess we're not there yet, but with each passing day, with no bounce in the dollar, it stands to reason we're going to get there sooner rather than later.
Yeah, and let's just pull up a 5-year of the Dixie for a second. You saw the downtrend that I drew there. You saw this kind of, maybe it's a little bit of a double bottom, maybe it's not. The UUP, which is an ETF that tracks it, we're going to take a look at that in a second. Looks a little bit different on a near-term basis, but there's nothing bullish to look at that and say, it's through support, it's through the 200-day, that sort of thing. Now let's go to the UUP. And I think regular listeners know every once in a while, I like to be a little contrarian. I like to use options to kind of define that risk off. And look at Guy, and again, the makeup of the Dixie, the US dollar index versus the UUP, a little different. But if you look where it bottomed yesterday, it's basically to the penny, right? Where we bottomed, I want to say in late April, early May. Look at the move that we had, from about 27 to where do we get? Almost 28-ish or so. I think we did get to 28. That's a reasonable size move. And so I was just looking at this. If you looked out to July expiration, there's not August listed, but it's July 18th. It's a Friday. The 27 call, okay, is basically trading at 50 cents. All right. So it's trading at 27.25. So it's 25 cents in the money. So you're basically paying 1%, right, to have this exposure to, let's say, up to 28 or something. 28, interestingly, if you wanted to draw a horizontal line from the breakdown in April, that's kind of the level. You see the 200-day moving average, it's 28.70. I know it's totally contrarian, but you basically, if you were to buy that July 27 call and pay 50 cents, you're basically paying 2%, you're 1% in the money. That's, to me, not a bad risk reward there, Guy.
All right, so let's figure out why that would happen. And I don't disagree with you, by the way. If you look at those bottoms, we drew the green horizontal line across. That makes sense. You see the downtrend that we're trading up to. So the question we have to try to figure out the answer to is what would cause this to happen? And maybe it is an escalation of some of these hostilities, or whatever word you want to use. And maybe then that becomes the flight to safety or the flight to quality in the form of the US dollar. And maybe it's on the back of an equity market potentially selling off for whatever reason. So maybe a bullish dollar play here is also a view that the VIX is going to go higher as well. And I'm probably reaching a little bit, but I don't think it's that far out of the realm of possibility to think that would be the set of circumstances that triggers this entire thing.
Yeah, and again, there's a scenario where everything settles down,
Mhm.
think about the position that the Israelis are in right now. I mean, they are controlling airspace over much of Iran. They've devastated a bit of their, air force. They've taken out a bunch of their, fuel apparatus, whatever you want to call it, energy apparatus. They've, taken out some of the key leaders in their military. I could see them pounding it for another week or so and then saying to US, have at it. You know what I mean? Like there's not much to negotiate anymore. And so, maybe that's the thing that finally, sees a bit of a calm. I will say one thing out of the G7. I was reading this at, probably 4:43 a.m. Thanks a lot, Amazon, this morning. But it was that, the opening salvo that Trump had at the G7, he's like, why isn't Putin here? Like you guys kicked out Putin. You know what I mean? Like Putin should be here. And when you think about that, it doesn't give you a sense that, the war and Trump was supposed to meet today with Zelensky. It doesn't get a sense that we're going to be like moving that thing along by any means. That being said, markets don't care about it. You know what I mean? That's not something that's been affecting. So if you have things that kind of slow down a little bit in the Middle East and, Russia, Ukraine has just been off the table for a while, then maybe you are setting the stage for like a smoother geopolitical sort of environment.
Well, I think, the S&P, basically, as we've talked about it, I mean, the all-time high in the S&P is, I think, 61.47. We're trading 60.20 right now. So,
Yeah.
120. So it's at 2% away. I think my math is right, from an all-time high in the S&P. So clearly the S&P feels the same way you're feeling. Real quick, before we get to some of our other stuff, we have some questions. This is from Lee J. What do you make of the carnage in the solar sector? And we actually, Stephen Rafis sent some information around about that earlier. And if you look at all these stocks, Solar Edge or First Solar, pick your poison in terms of names. They're all down significantly today on the back of some news. The reality is, we recently saw a bounce in like a First Solar. I think the stock went from like 129 up to 190, and we're right back down to the middle of that range. And these stocks, Dan, if you look, I mean, they've all been basically trading horribly since spring of last year. So I don't know. I mean, it feels to me it's like every bounce in these names have been a selling opportunity. I don't know what's changed or what's going to change to make it sort of flip the narrative at this point.
Yeah, so the Senate bill, the tax bill, is taking out a lot of incentives for solar. That's one of the reasons why, these stocks are trading the way they are. Difficult industry also, that so many of their components come from China. China kind of owns the market here. So this is one of those ones where, you can try to get your arms around it from basically what are the tax incentives and what happens to the stocks, whether they're in, they're out, that sort of thing. But then you also have to do the contending with, the Chinese and the like. So again, it's not a sector that you and I
No.
spent a whole heck of a lot of time thinking about. But Guy, I just want to go back to the S&P chart for a second. So you talk about 2% away from those all-time highs. Even when we were back in late January and February, they felt like precarious highs. So if you want to isolate that period, after we had that move higher in November, one of the things that was interesting is like we had a lot of sideways action. Even into January, we kind of retraced, we kind of filled in that gap. Now, that emboldened folks like you and me who wanted to take the other side of the Trump bump, you know what I mean? Because we saw a lot of those trades fill in the gaps. We saw energy do it. We saw, a whole host of other kind of risk assets do it, or risk assets. And when we made that kind of just slight breakout, and then you see that precipitous drop, which started in February, that didn't have anything to do with trade and tariff. You know what I mean? At that point, now the trade and tariff stuff really kicked in, obviously, in late March, early April. But here we are. We're just right below those levels. You see that gap from the push out of the Chinese tariffs. You see that 200-day moving average, which is right through that gap. I mean, at what would be the reason? Doug Cass, our friend over at Seabreeze, writes for thestreetpro.com. He sounds like a very lonely guy trying to articulate the bearish story, and he and I were going back and forth. He makes a lot of great points. You get to a point where you have like slowing momentum. They've tried to broaden the rally out a little bit. We're stuck right here. You see the levels to the upside, which we've been talking about, but we're not there yet. And then you see this gap to the downside in that 200-day moving average. I guess I feel like I'd rather play to the downside than the upside right here.
So what's the headline? I mean, this is, by the way, for you T-shirt fans, and we will have them made. This is a static chart, but if Stephen and or Jacob can put up a similar chart with a 50-day moving average to see where we are. We obviously had that death cross in early April, which, by the way, as we said at the time, and Carter talks about this, that was actually the exact wrong time to sell and the right time to buy. So if you throw the 200-day on top of that, you'll see we're probably getting close in terms of, that crossover to the downside. Well, probably getting close to the 50-day crossing over to the upside now. It was still I'm sure we're still a little bit of ways. My point is, a lot of times these things are a complete fake out, and you can see what I'm talking about there. So maybe it's that coincides with the 50-day approaching the 200-day or something like that,
Yeah.
right? And then we sort of fail at those levels. And with each passing day, by the way, even if we go sideways, the 50-day will catch up. In terms of news flow, I don't know what it is. I think the weakness in the dollar is going to continue to be a concern. I think a hiccup in the bond market could be that. I think, escalations that we don't foresee coming in the Middle East could be those things. But to your point, it feels like it's getting a bit tired here. And in terms of valuation, it's clearly overextended.
Yeah, no doubt. So, the lack of upward momentum. And then if you start to take, like some stock of this sort of complacency that exists, this kind of thought that, tax, extension and cuts is going to kind of fuel the next leg of the rally. Obviously, the cuts are retroactive and then to tax rates, right? And then some of the spending just continues to stay there. So it's just real stimulus. I mean, if you think about it, right? So let's see, because we haven't gotten a big bump from some of these headlines about trade deals because there haven't been many, right? And there's been only frameworks. And if we get to July 9th, which is the 3-month period where they're going to do, 180 bilateral deals or whatever, and that hasn't happened. I mean, let's see what happens there, because if you keep kicking the can down the road, maybe that is the thing that people feel okay about, and sooner or later they're just going to give up on the trade stuff, and we just stick with these kind of 10% across the board, and companies and consumers and everyone just feels, they get a sense of how to deal with it. I don't know. Yesterday we spent some time on the stocks guy. Go back to the semiconductors. Let's look at the stocks for a second, because in a day where we see, lots of action going both ways, this thing keeps powering on. Some of the names that we talked about yesterday, ARM, AMD, Intel. Now they're giving up some of the gains. Micron, they're still kind of moving along. Those are some of the crappier names. I don't know if a dash for trash is the sort of thing that, gets them stocks to break out here. You see that January high where Stephen drew the horizontal resistance line. I don't know if it's really resistance or not, but we broke out above that 200-day moving average. After that little flag, you get to that resistance level, which was the 2025 high. I'm just hard pressed to see, Guy, after we've come so far from 150 in this ETF to 228, that there's enough in there, enough gusto, enough fundamental news that's going to pop this thing out, and it's going to continue to go.
And that's how we led fast money last night, in terms of, is this going to, the strength here, is this going to be the key for the broader market? And the math suggests it has to be, right? Just the weight of the entire thing. But, if I agree with you on the S&P, almost by definition, I have to agree with you here. And here's a good example. Qualcomm, if Stephen or Jacob, I apologize, I don't know who's running it today, but put up a long-term Qualcomm chart, and you could see this downtrend we're probably right up against since, I want to say, last spring. I mean, you can draw that downtrend line. Quite frankly, we might either be tad through it or right on it, but you can see what I'm looking at here, Dan. And then all these charts, to a certain extent, are a little bit different, because all these names find themselves in sort of different businesses in the semi space. But, here's one that I think people have sort of forgotten about, that we're either up against a huge resistance level, or we're getting ready to break out to the upside, and sort of pick your poison, as they say. But you can see that downtrend line that I think we're approaching right now.
Yeah, and I think the main point there is, like, if you don't have a good narrative right now as it relates to generative AI, then you really are just a dash for trash. You're just expecting this thing to broaden out. One name, though, I do think is interesting is AMD. And we've been talking about this, sooner or later, they're going to have a chip that competes with NVIDIA's high-end GPUs, and they're going to compete on price and all that sort of stuff. And so, on a 1-year basis, this is the first time it's above its 200-day moving average until, since I want to say late October. Is this what Carter would call a bearish to bullish reversal? Maybe, it's got a decent little, I don't know. Maybe that's a good pattern. Maybe it's not. I think you and I are probably in the same camp. We're not really chasing too many of these names, but Intel that we did look at yesterday, guy, I don't know how you chase this one because this thing can't get out of its own way.
No, I know. And this is one that I've tried to figure out a compelling reason to be long. And a couple times it felt like the right thing, but your point is well taken. I mean, it can't get out of its own way. It's sort of stuck in the mud here. I still think the risk reward sets up really well, understanding you probably got to stomach it potentially down to 18.5, 19. But if they can figure this out and sort of get one thing right, I mean, this is a stock that could, I think, trade up to the February highs and nothing effectively has changed. But, put up an AMD chart because you have the same downtrend line real quick that I was just talking about in Qualcomm. If you go back from the March 2024 highs and draw a downtrend, you'll see what I'm looking at. You probably got to go longer than that, but there you go. So draw that from that high and you can see basically what we're looking at in terms of AMD. It's a very similar downtrend line that we're seeing in Qualcomm. The question is, are we through it or are we right at it? I mean, I think that's what the market is trying to figure out. And they both look very similar. You just said we're through the 200-day for the first time. You're right. So, maybe we are starting to see some breakouts in these names.
Yeah, I mean, AMD would be the one if they ever get their act together. Lisa Su, the CEO, has been talking about the TAM for a long time. So again, a lot of these sort of hyperscalers would love to have second sources. Maybe finally they get their act together. I wanted to highlight Western Digital for a second here, Guy. It's about to make new 52-week lows. I mean, this is a company, obviously, it's known to be hard disk drives. They also have a lot of NAND flash and memory. Look at this thing right here. The stock has doubled off of its April lows. Okay. And you could say, well, it also got basically cut in half, off its April lows. But here we are, it wasn't cut in half totally. I mean, this is one of the cheapest stocks in the market. And you detail these sorts of scenarios all the time that they're very cyclical, right? And they're subject to a lot of these sort of, like cyclical shifts and that sort of thing. And obviously highly commoditized. So yep. Look at this thing trading 11 times earnings or something like that. You can make the argument, still cheap, expected, even if it's mid to single digits, high single digits growth, that sort of thing, and say, well, why wouldn't you take a crack on that? How do you think about a name like this? Because obviously data center demand is a big thing here too.
Well, I mean, the bounce has been pretty unbelievable. You just said we went from 52-week lows, I think, in early April to 52-week highs, effectively where we are trading now. I mean, you don't see that too often in a name. I mean, it's still a $20 billion company. So shorter term, you'll see these current levels are where we topped out at in the summer of 2021, basically the same levels that we topped out at in the summer of 2024, around 59 and change. So you have that working against you in terms of resistance. And if you want to go longer term, Dan, there's a huge downtrend line from I want to say the winter of 2015 when the stock was making an all-time high. If you want to sort of effort that chart, and you can see the downtrend we've been in. So I guess I'm bringing that up because huge frickin' levels right here in terms of resistance. Now, like AMD and like Qualcomm, you get to close above it, and maybe you start to get off to the races in some of these forgotten names. But, I think the resistance level speaks to itself. And, I think you'd rather buy a breakout at this point and get with the sort of caveat that it's already had a huge move, then try to play it from here.
Yeah. Another name, similar name, their customer, Western Digital, customer of Dell. Let's pull up Dell for a second because a couple weeks ago, I put a bearish put calendar on in Dell. It hasn't worked out particularly well, but I did define my risk, and I thought it was a good spot to take a crack here. So this thing is interesting. Now, I brought it up over the last, few weeks or so as we've seen this semi move, as we've seen the generative AI, kind of trade get reinitiated here. And the consolidation here, right along that 200-day moving average, it's kind of pretty good looking. You know what I'm saying? The thing actually think held up pretty well, at least in that early April period. You know what I mean? You see that. And, obviously from the highs that it made late last year, it's kind of a different story. But now it feels like it's found a level of equilibrium. It also has a valuation that's supportive. They also have very low margins, which is not that supportive. You know what I mean? So curious on Dell here, because I'm not sure if you think the market is topping out and the stock's about to top out. You don't want to play this thing, but if there's going to be new highs and it's going to be led by the generative AI, the hyperscalers and all that sort of stuff, Mag 7, this thing should play some catch up, fill in that gap from late last year.
There used to be a show called The Joker's Wild, and it was like Joker, and the triple. Well, I got the triple for you in terms of a chart pattern. And Jacob or Stephen, go back to the spring of 2024 when this stock made a huge run to the upside, and you can see that downtrend. It's all, all these stocks are seemingly in the same pattern. And if you draw that downtrend line, just like in AMD, you're probably started to get through it just on the time decay. The longer you trade sideways in a downtrend line, the more chance you have to break to the upside. So it's the same thing. You can be playing a breakout in AMD, you can be playing a breakout in Dell on these trend lines, or you can say we're failing here. Carter, I don't know what Carter would say here. Maybe we can look at it next week with him. He might say pair of twos here, but you can see what I'm looking at. So I guess depending on your dogma, either AMD and Dell are both breaking out or they're both failing at a downtrend.
Yeah. And again, I just bring it up because of the kind of secular narrative and where they kind of, play in that. So it's one to keep an eye on. This is interesting, Guy, and I didn't see this coming, except for the fact when you think of, we never talk about these names, but there's been a bunch of articles, I think, in the lead up to this Cannes Lion. This is a big, advertising event that goes on in Cannes, France, and everyone I know who's in advertising or in ad tech or anything like that, they're out there right now. But there's been a lot of talk about how generative AI is absolutely going to destroy this industry, right? And, we have some experience dealing with some of these companies, with some of the brands, and let me tell you, the brands that actually pay these guys don't like it. I think folks like us on the other side don't like dealing with these guys. You start wondering what they actually add, the value, that sort of thing. And there's a lot of great little agencies that actually do work for, different brands that I think are not nearly as onerous as these, but these are massive holding companies. They've spent the last 30 some years buying up all these different agencies, right? And look at the year to date here. When you think about the effects or the adverse potential effects of generative AI tools, right? And then you look at the sort of the government, the way they're focused on this thing. This is a headline that I don't think anybody who watches sports all weekend would disagree with, because I don't know about you. They advertise these ads. You have no idea what they're talking about. What is the purpose of them for the most part? And it just seems like this is something fine. RFK Jr., have a ball. Get rid of a lot of these ads, or make it easier for, consumers to understand what they're being advertised for.
It's my funny. My wife's in the business. She's a scientist at Merck. And when these commercials come on, I don't ask every time, but, I ask her, who are these commercials sort of targeted to? Yeah. Is it to the patient? Because, or is it for the patient so they can go into their physician and say, I would like to try this drug? I don't know. I don't really understand how the whole thing works, or maybe it just creates brand awareness. But to your point, this is probably something, well, whether we saw it coming or not doesn't matter. But AI, and I've seen, I've read things about it, and I'm sure you have as well, in terms of what they can do with commercials and how cost effective it is as opposed to the days it takes to make a lot of these commercials. I mean, it's going to put a lot of these companies out of business without question. So I don't know what it means for big cap pharma, if it means anything, but it clearly is negative for these stocks that sort of rely upon that ad spend.
Yeah. One name quickly that I just wanted to highlight is Adobe. And this is one we've talked about. It's kind of in, the sights of some of this technology and the services that they offer to some of these creative agencies and the like. And you just see, I suspect the stock is down 3% today on, some of those headlines. If, you just said putting it out of business, I mean, some of those big holding companies are literally going to have to destroy some of the brands. You know what I mean? They're going to have to kind of cannibalize themselves, kind of eat a bunch of the losses, as it relates to this acquisition strategy over the last few decades. And they're going to have to get more nimble, and they're going to have to adopt this technology. And sadly, that means that it's going to put a lot of people out of business, I suspect. But Adobe is one of those tools that a lot of those folks are meant to use, right, in these creative sort of endeavors. So I wonder if that has something to do with it. Last one in pharma, Guy. Novo Nordisk, this is one that I think you played well off the lows. You know what I mean? We actually did some positioning. We did it on market call, kind of positioning for the move off of the lows using options. It never got to that 200-day moving average. It did get to a breakdown level here. Some of the headlines are not great right now. So it seems to like it got off the mat because of poor sentiment, right? And then maybe the sentiment got a little too bullish. But what do you do with this thing right here if you played it off the bottom?
We had a conversation last night about this, and I asked. My question was: is Novo out of the woods, or is it just a bounce off an oversold condition? And the answer was a bounce off an oversold condition, and that seemingly is playing out right now. So, I thought it could easily trade and sort of fill gaps that we created to the downside, and that's north of $100. But they're clearly headwinds, and a lot of it just comes on the fact that as much as they were sort of 1 and 1A in terms of Lilly and them, now it seems like it's Lilly number 1, and there's not even a 2, 3, or 4. It's Lilly and everybody else, and I think that's the way Novo's trading. If you want to sort of put up a chart, comparison of Novo and Eli Lilly over the last 5 years, you can see there was a period of time they were trading in concert, and that obviously decoupled over the last year or so. So as much as I'd like to sort of play Novo for a catch-up trade here, and we've been saying that for a while, I mean, the price action is, in a word, pretty shitty, Dan.
Yeah, no doubt. Here's a question, guy. It's kind of in your wheelhouse, but there was a name that that's somewhat related that I wanted to kind of take a look at. So this is from Eric Metcalf. You make
Eric's on every day.
Yeah, he is. Thanks, Eric, for being here, and thanks for the great questions. What do you make of steel and Nucor and Cleveland Cliffs? So NUE and CLF. What do you think generally about steel? We have that U.S. Steel deal. It was approved. The Japanese are going to buy it. They made all this sort of concessions, at least that Trump wanted to hear. The Biden administration initially blocked it, right? The Trump administration initially, kind of steadfast here. Thoughts on these? I don't know jack about steel.
Yeah, well, look, if you think things are slowing down, and a lot of the data suggests exactly that, it's very hard to be bullish in, for example, Cleveland Cliffs, which I think is trading about $7.50 or so. And if you look over the last 3 years, I mean, it's effectively been upper left, lower right. And I think the 52-week low is like 5 and change. There's just no bounce in these names. And Nucor is maybe a little bit better, but not much. So I guess what I'm saying is you look at the data. I think things are slowing down. The numbers that we saw this morning suggest that. It's then very hard, I think, to be bullish in these steel names that are obviously very economically sensitive. So the bounces have been sold, and I think that's going to continue to happen.
Yeah, and just value traps too, right? But these are always sectors that for me, you think, okay, China reflating, take the tariffs off, global growth, blah blah blah. This never rallies. I mean, like it never rallies. I want to put BTU up there, and this is coal, right? And so one of the things you see all of these hyperscalers doing all these deals for nuclear, right? And you say to yourself, this new administration, they don't seem to care much about using dirty sort of, energy and the like here. Is this thing trying to make a bottom here? Did that early April, it was that kind of it. Maybe Stephen could pull it out to a 5-year. And I guess it's more of a fundamental thing than a technical thing. But sometimes we like to look at, a chart and see, just like a chart speaks to sentiment, right? Like if you think about it, and that decline that we've had over the last, year or so is fairly precipitous. And I think that jump came after the election for the most part, but then it quickly filled in that gap.
This is one I think Danny, Vinny, and Porter talk about. The recent low that we saw, which I think was like 9.5 or 9.75 or something, like everything else in early April, was pretty much the same low that we saw in December of 2021-ish. So you had something to sort of, there was a level of support that made sense. We're bouncing now. I mean, I don't think we're seeing a bearish to bullish reversal yet, but it feels as though something's underway. So I think in terms of risk reward, it sets up pretty well here. I mean, these are volatile stocks, but there is a push with this administration, obviously, to get back into, beautiful, clean coal. And I'm saying that with sort of air quotes. And I think the place to be, if you want to play that trade, is BTU Peabody Energy.
Yeah. All right. Well, we could also check in with Danny, Vinny, and Porter and see what they
we often do that.
Have to say. All All right, so just looking around here, Guy, we have an S&P that's down 38 basis points. Seems pretty mild given the uncertainty. The VIX is back above 20, which I do think is interesting.
I think that's something to watch. I mean, we've talked about that for a while, that the troughs in the VIX down to like 17 or so have been sort of, in the last few years, that have been sort of the peaks in the VIX. So past resistance becomes support, if that makes sense. And I know it does to you. So I'm still a believer that volatility is a theme this year. Now, we're June 17th today. So with each passing day, we're going to get closer, obviously, to month end, quarter end, and weird things happen. And as we get later in the year, people that are behind the eight ball will start to chase. But the fundamentals and the sort of the metrics that we talk about, the overbought condition that we found ourselves in, I think there's a very, very good chance the VIX has another couple chapters left before the year is over.
Yeah, and again, this is a day before the Fed meeting, and we hear what they have to say. Obviously, there's no expectations for a rate cut, but if you look at the 10-year yield at 4.42, and we talk to this flight to safety, so if they're buying U.S. Treasuries, you're going to see the 10-year yield go lower. And I say to myself here, Guy, the Fed has to be super careful. You see crude oil trading at, multi-month highs. Obviously, that's inflationary. The tariffs and uncertainty around that is going to continue to be inflationary. Protracted wars are inflationary. So there's nothing that speaks to, the fact why the Fed would kind of get easier here than folks expect prior to the expectation of a September 25 basis point cut, right? I mean, so like, I think, 24 hours from now, when we're sitting here and we're going to be 2 hours away or so from, the Fed's meeting, I can't think about a scenario where the Fed gets dovish, I guess, for the right reasons. I'd like to think that they're not going to cause any alarm bells by saying, the geopolitical stuff and this and that, whatever they're really worried about, you know what I mean? Because, they're worried about in the old playbook was cut interest rates, right? Get easier monetary policy, but that might not be the thing that would be great for some of their inflationary fears.
No, I agree with that. And you're going to start, if you haven't already, I think now that we're inside a year before Jerome Powell's term expires, you're going to start hearing more and more about the next Fed chair. I don't know if that means anything in terms of the market, but it's something I think should be on people's radar screen, because as you have said, the chances are the next Fed chair will be someone who shares the same sort of points of view, I think, as this administration. Again, people will believe that will help interest rates go lower. I'm not one of those people. I think we've seen it firsthand over the last year that just because the Fed cuts doesn't mean rates are going to follow, but we'll see how that plays out. And we'll see if that creates any more volatility in the bond market.
Yep. All right. Well, we actually have a really special risk reversal podcast tomorrow, right after the Fed presser. We are going to have Peter Bookvar, Obliquely Advisors, breaking it all down with us. That's going to drop Thursday morning. And you guys are not going to be working. We're not going to be working on Thursday morning. So you have plenty of time to listen to Peter and digest what he thought about what the Fed said. All right, man. We'll be back here tomorrow at 11 a.m. I had a great conversation with Dan Ives from Wedbush, and we talked all things tech. That is in the Risk Reversal podcast feed right now. So go check it out. Rate it, review it, share it with folks, Guy. That's how people find it.